When it comes to financial planning and wealth management, the investment plan is incredibly important. Acts as kind of a seatbelt, a protection for you. We're going to explain this analogy a little bit coming up with Rob and talk about the importance of an investment plan and how to make sure you have an effective one in place. Welcome in. This is Legacy Beyond Wealth. Glad to have you on the channel. If you haven't subscribed, please do so. We appreciate you being here. I'm with Rob Shelton, as always, from Axio Wealth Management to get into this today, Rob. But investment planning, I think everyone thinks of investing as the thing that you do the most as a financial advisor, but it's one piece of the puzzle, but it's an important one, isn't it?
It is, absolutely. And I think when we've seen times of volatility like we've seen here in 2025, it always is a good time to be able to have that discussion and say, hey, what should be part of an investment plan?
Yeah, and we're going to get into that today because I think a lot of people don't necessarily understand their strategy. There's a lot of DIY investors, and there's a lot of tools out there to do that effectively, I think. But most people just don't understand their strategy necessarily when they're putting it together themselves, do they?
They don't. And I think, if we go back to that car analogy that you were using,
Yeah.
I love it a little bit because a lot of times people don't understand where cash plays a role in an investment plan because they don't necessarily see cash as an investment. And typically during the good years, we look at our return on our cash and go, gosh, that's peasly compared to what I could get in some other investments. And so we have this tendency, even as financial professionals, to creep a little bit and remove more from cash to put into the investment side. I think if we were to draw out a picture and we had a teeter-totter, and on one end we had our longer term investments, we have to have a counterbalance to that of cash. And using that car analogy, the cash is like your seatbelt or your airbag. It's something you hope you don't have to dip into or use. But goodness, if there is an obstacle or something that blindsides you and you get into a wreck, you're sure grateful that you had that there to be able to protect you, that seatbelt and that airbag. And so I think right now it's a good time to check and say, how much do I have in cash?
Mhm.
I know that's a conversation we're having with every one of our clients in good and bad times, and to making sure that we have the right cushion that's there. Because when turmoil happens, boy, it's sure a good way to calm your fears to know, hey, I can make it through, 2 years of this volatility and wait out the storm a little bit versus, oh my gosh, I don't have that protection. It can really ramp up the emotions to make irrational decisions.
Well, that 2 years that you just threw out there kind of caught my attention. What's typically the amount that you say, hey, this is kind of our general guidance on what you should set aside? I know it's going to be different for everyone, but generally speaking, what do you recommend for someone?
Yeah, if you're still in your working years and you're trying to save and put money away, we're looking at about 6 months of income is what I would say would be the nice amount to have in cash. And then beyond that, if you're not working anymore and you're needing your investments to live on and sustain you, then we're looking at about 3 years of living expenses saved up in cash. And so that cushion just needs to be that much bigger because you're reliant completely on it for income at that point in time.
Yeah, that's interesting. It's interesting that you said 6 months of income. I've always heard it positioned as 6 months of expenses. I guess income would be on the higher side, but I guess just a way to play it a little bit safer.
It is, and honestly, I have learned that we can have these different recommendations that are industry wide, but really it's got to be custom tailored to the client. And I kind of joke with clients sometimes. I tell them, my brother went off to law school at Virginia Law, and the dress code trends tend to be a little bit more timely there on the East Coast. It takes a little while to make its way to the West Coast. And so when he came back to visit, he was wearing these things called skinny jeans, and they looked like the most uncomfortable things for me in the whole world. He raved about it. And I made fun of him for it. And then a few years later, lo and behold, it's the new style. My wife comes to me and says, hey, you got to kind of get up with the times. And I appreciate her always taking good care of me and trying to make me look my best. And she's like, you got to try these skinny jeans on. So we went out and we bought some. And boy, I didn't last more than 2 days wearing those because I was so uncomfortable. And I couldn't wait for those to go out of style to be able to get back to some real relaxed fit jeans is what the one I prefer. So using that analogy with clients, we got to have that conversation because money is so psychological. And you've heard me say this before, Ben. I feel like I should have got a degree more in psychology than in finance, right? So I could say, hey, 6 months of expenses, but if that client is staying up at night saying, gosh, that only gets me to 80,000 that I need to have saved up, but in my mind, I need 120 to sleep good at night. well, then that's the right number is what helps you sleep good at night, right?
Yeah, exactly. And I never would have heard the analogy of, your savings account is your emergency savings is a lot like skinny jeans, and that
There you
it's going
go.
to be a different fit for every person. But
I'm just glad we don't have a graphic to show of me and my skinny jeans. So I'm grateful for that,
you
Ben.
want to send over a picture, we'll make sure to
Yeah.
work it in. Our editors will fit it in if you want. But well, I know this conversation obviously is kind of predicated by what's going on right now, just nationally, and you kind of touched on that with the market volatility. Are you working with clients and kind of having conversations about clients right now in terms of trying to keep money in cash versus, hey, where do we invest some of this because the markets have been down recently? Maybe this is an opportunity. How do you find that balance?
Yeah, I think the first thing that we always look at is we have to identify how thick the pillow needs to be to help you sleep at night. And that's that cash account, right? That's the seatbelt or the airbag. What's the right amount we need to have there? Once we fill in that question mark, then we can start to talk about the long term investments. We had a client that just had a nice payout from another investment that he had done, and it paid out a sizable amount of money. And he called me and said, Rob, what do I do with this money? And I said, first question is, how's our pillow? And he's like, well, we had some expenses go out because we had our garage epoxied and we finished the basement. But, we refilled that back up to the number that we felt like was appropriate that we discussed earlier. And I said, well, then we need to put a big size or a chunk in right now while stocks are on sale. So I think it's a little bit different. I think what we have to do first to determine in an investment plan, what is the right amount to have in cash? And again, these are conversations that hopefully people are having with their investment professional. Most of the time I find that it's hard to have that conversation because most investment professionals don't get compensated on cash. And so most time it's relayed upon how do I help you get invested into where the advisor makes some money on the assets. I think it's a whole different approach. Is if we have enough in the cash, it helps us to be more disciplined as an investor on the longer term investments, and you'll see a lot more quality of life, in my opinion, because you got a seatbelt and a good airbag to protect you if there's something that comes and blindsides you.
Are you ready to unlock the freedom to live your best life? Schedule your no-cost 60-minute discovery meeting with our team today. During this session, we'll take the time to understand your family story and financial dreams. Together, we'll craft a personalized roadmap designed to help you achieve your goals. Let's explore how we can unlock the freedom for you and your family to thrive. Just click the link in the description of today's show to get started.
I don't know. Look, I know timing the market's never a winning strategy long term, right? But when you get to a situation like this, when the market has a big pullback, is it ever okay to tap into that or pull some from that pillow, maybe, so to speak, and use that to invest and kind of take the opportunity? Or do you always try to keep that pillow filled up, so to speak, as you move forward?
I think you want to be careful. There's always this hesitancy. I think we got a whole bunch of analogies today, Ben. So forgive me. The creative mind's just going. But I had a professor once tell me that pigs get fed and hogs get slaughtered.
Mm-hmm.
And so I think the idea there in that analogy is you just can't get too fat and too greedy. And so when we look at it, sure, it's time to reevaluate it, but just be careful that there's always this hesitancy to creep. And we don't know how far down this is going to go. And that's why it's important to first make sure we got the right amount to be that safety, that seatbelt or that airbag for you. And then any excess of that, you could go beyond it. Now, there might be a time where we need to readdress how much you have. It might be that maybe your spouse now started working, or you got a raise at work, or, things of that nature that come into play that maybe we need to look at it. Maybe we paid off the house and now we need to reassess how much we need to have in cash. So there's a reassessment for sure that needs to be done on a regular basis. But the more disciplined you can be in investing, the better your chances of success. It's when we go off of these exceptions and we become undisciplined and try to get too fat is where we get slaughtered.
All right, very good. And for anyone that's kind of, wondering what the future might hold, maybe bring out your crystal ball a little bit here, Rob, and just what do you think in terms of the market volatility of the economy? I know things have been kind of up and down. We're in the first few months of the new administration, but do you think things settle down here in the near future?
Yeah, it takes me back to the year 2020. In March of 2020, we saw a huge drop in the stock market because there was a thing that came out that everyone was worried about called COVID. The end of the year ended up being a positive 19% return. So we're still in the very first few innings of the baseball game here, and there's a lot more game to still be played, and who knows where for sure things are going to fall out. But I think this is a good gut check when we have this kind of volatility to say, hey, where do I stand? How do I feel? If I'm starting to feel uncomfortable, like I'm in those skinny jeans, maybe it's time to get a second opinion and reassess where things are at. And again, your investment professional should be meeting with you on a regular basis, helping you understand, even in the good years, hey, when volatility does come around, here's what we have planned for you to make sure you're safe. And if you're not having that discussion, I would say there's a big gap in your investment plan that needs to be addressed.
Yeah, and there's a Calendly link if you want to jump down there and discuss. Go ahead and book that discovery meeting. It's a 60-minute, either in office or on Zoom call with Rob and the team there at Axio Wealth Management to talk about whatever your concerns are and get a better idea of your financial picture. But kind of quickly, Rob, talk about how that investment plan, that piece of it, fits into the bigger picture of what you're trying to accomplish with clients.
Yeah, I mean, I think every client that I've talked with, as we really get down to it, they want to live their best life. And money is just a way to be able to help that take place. It's a vehicle. It gives them the freedom to be able to do that. And so what we're trying to do is create that financial freedom. But if we don't know and we're not disciplined and have rules in place, it's hard to be able to accomplish a big feat of becoming financially independent. It's one of the things I love about the United States is that we have such an amazing opportunity. We call it the American dream to become financially independent. But we have to take that proactive approach and being able to be disciplined between balancing living your best life today and saving enough to live your best life for tomorrow. That's where the investment plan helps to really balance those competing interests out.
Well, you can discover how Axio's tailored collaboration can elevate your financial future by going to AxioWM.com. But make sure you take advantage of that discovery call. If you haven't done so yet, if you're looking for someone to work with, if you are uncertain about your investments and kind of the future and whether or not you have enough filled up and whether or not you're going to fit in those skinny jeans, whatever the analogy is for you, obviously this is a great place to start. But we appreciate you watching this video. Hopefully this kind of gives you a little insight into the importance of having cash, to have that investment plan that you understand and that you feel good about for times of uncertainty. And hopefully this helped you out as well. And if you like it, enjoyed it, please subscribe to the channel. We'd appreciate that support. Rob, thanks as always.
Thank you, Ben.